right?
Generally, yeah. Yeah, I mean, it's hard not to, right? Especially when you're interacting with other people, and maybe they got a good trade or a good position on, and you don't, right? And price is screaming. That's tough. That's why I think it's always a good idea to at least try to participate with the market. You know, um, even if you don't, you know, even to if there's a trade idea that you don't think is going to happen, have some type of scenario where if it does come to pass, you're still able to participate in that move. You know,
Yeah, yeah.
um,
I mean, at least it will keep at bay your primal instinct to jump into the market. If you have a little bit of exposure to it.
yeah. I mean, the idea is kind of that, like right now, right? Like we kind of formulate a macro bias for price going up, right? I mean, I've sort of touched on that and kind of explained my reasoning for that, but I also want to have a plan for if the opposite happens, right?
Yeah,
In order to do that, I need to hedge my current position so that that makes it easier. I don't know, like hedges are one of those things where like on paper, you could look at it on paper and it doesn't seem like you would need it, but like in reality, when you actively hedge your positions, then in reality it's much easier to pivot or have that flexibility. And typically, I'll hedge a position with like 20% risk or something like that. But then I have that, right? If it goes against me, and then I can build onto that hedge, and then that hedge becomes, you know, uh, the position that I trade in the other direction.
yeah. I mean, I guess hedging is a little good practice, but I think at the very beginning it's kind of difficult to grasp because it's like I don't know, but maybe it's just personal experience. But every time I was like, this market is coming down and probably it's going down for a few weeks, so I would like to open up a short to basically preserve my USD value. And it was kind of strange because I do remember it was 2 years ago, a little bit more than 2 years ago, and there was this period when every time I was trying to open up a short to edge myself, basically the market was fucking me over and over. And I was like, maybe I'm getting something wrong here because every time I'm trying to edge, the markets keep going high. So rather it's me which I'm reading it wrong, or maybe hedging it's a little bit more complicated than what I was anticipating, and it took me another year and a half to figure that out.
Yeah, I mean, hedging is only for like position trades, right? Like long, trades that are
Yeah,
going to be, at the very least several weeks or ideally months, and then you're sort of in a weird place between investment and a trade. I mean, I wouldn't really consider it an investment because you need to manage risk, but it's a little bit different than it's a lot different actually than intraday
yeah,
volatility. But the cool thing about it is when you build those positions, right? Then you can use the lower time frames to manage risk on on your position trades. So you're like, you're using the intraday volatility to pull in profits off your position to hedge your position. It's just a more dynamic approach to the market.
yeah, yeah. I think so. And again, it took me more than 2 years to figure that out. But at the end of the day, I gotta say that although I was holding spot positions, but today, up to this date, the best trades I ever had on Bitcoin was short positions. And then don't ask me why, but
Yeah,
maybe it's just because the volatility to the downside is usually more impulsive. But I don't really think that's the case in Bitcoin because we have seen rip up to the upside so frequently. But I guess it was, you know, I do like to fade markets. It's something that lives within me. I don't know why,
So have you noticed
but that's
that?
just my history.
Have you noticed that among like different market conditions? Like different. Like obviously you'd probably notice that in a bear market, but you're also pulling off successful shorts in like a bull market in Bitcoin.
Yeah, yeah.
Really, that's impressive. Yeah. Well, we. I don't know if you necessarily want to have huge short exposure during the bull market, but whatever you're doing on the short side obviously is pretty effective, and that would whatever that is a great hedge in a bull market, right? So, or maybe you're not using it as that, but it could you could use that to build out a hedge.
Yeah, I mean, of course, if you see a market which is only going up, if you look at the weekly, the daily, even the 12 hours, right? And you see the market is bullish, of course, you're not going to put so much risk on a short because you know that Bitcoin, when it runs, it really runs so hard. So it can really steamroll you in a matter of minutes. So, of course, my risk in a bull market when I was taking short positions were really tiny. I'm talking like 0.50%, 0.25%. But, even in a bull market, you can have that violent retracement, which, I mean, if you can play it, it can really give you a lot. And at the end of the day, it's kind of comfortable to be able to take it because you know that it's like I made this amount of money in percentage terms on these down move, and now I know that now that price has bounced, it's fine support. I can just be hands off because I made my money on margin trading, and now I'm gonna enjoy the my spot positions to go up, right? It was something like that to some extent.
Yeah, it's very difficult to like be successful with margin long positions in a bull market like over a long period of time. Actually, um,
Yeah,
because really what a bull market is like it just engineers. The whole concept is, yeah, it's going to kick a lot of people out of their positions. It's going to stop them out. It's going to liquidate them. That's the whole point of a bull market. But so if you can like find ways to hedge that, the up moves, ride them down, and then kick that into spot, and then ride the spot position up, then that's probably the most ideal scenario because you know you, uh, you want in my opinion you want in a bull market the majority of your position to be a spot position or like a futures position for much lower. You don't want to be trading intraday setups long on heavy leverage. It's just not a good it's not a good way to do it in my opinion.
yeah.
um,
And the funny thing was that I looked back at it, and I did realize after 9 months that if I was taking shorts on retracements, right? But I did realize, and it was only 9 months after the fact, that every time I was making profit on my shorts, if I would have opened up a long on those take profits, I would have made so much more money. But in that moment, it just escaped me.
yeah, well, I guess that's why you got to write it down on paper, right? um,
Yeah, I mean,
so
but it was funny in a way.
yeah.
It's like, yeah, I've done good, but basically, for some strange reasons, I've done good, but I was basically trading the market in the wrong direction. It would have been much more beneficial to me doing the opposite. I would have had much less risk and much more returns, but because I'm a stubborn motherfucker, I actually did the opposite, and I consider myself lucky because I was successful at it.
Yeah. No, I mean, the other thing, the reason why you want to do that is because it, if you can get caught up in like trend trading and put a little bit too much weight on the trend, right? And then what?
Yeah, yeah,
And it's not that you always want to fade the trend, but it can create a situation of certainty in your mind, like the trend has to continue. and then that's where you can get yourself in a position where when the trend does reverse, you get like really, really fucked over because you didn't think that was going to happen. You didn't think it was possible. So all your setups were not taking that possibility into account.
Yeah,
And so if you, yeah,
that's
you know,
a very, and that is another valid point because I do remember. I think you recorded a video about that, about, and there was some sort of a brief mentions about trend trading versus volatility trading, and I think, yeah, trend trading strategies are pretty good. With, the only caveat is that you need to be good enough to identify in a decent amount of time where the trend is over. So you need, if you have a trend strategy, and if you can only work with a trend strategy, you need to be really careful and really quick to identify when the trend is over, because at that point you need to sit on your hands if you don't have any other strategy to trade, because
yeah,
otherwise you risk to give back a lot of profits.
yeah. Well, it kind of goes back to what I was saying is like if you're trend trading, you want that position trade, right? That maybe a big futures position where you don't have to pay funding on it from much lower. So like we current price now, came down, hit a macro level, consolidated, and broke out to the upside. So ideally, you would if you were trend trading, you'd already have that futures position established down in
Yeah,
that range, right? So you'd already be long. Maybe you'd have a bunch of you know, just throwing out a number, 100,000 futures contracts from 38,000, and
yeah, yeah,
so and then you don't have to pay funding on that, and you're very far away from your invalidation. Um, and
yeah.
you just don't, if you're trend trading, you don't want to be getting in and out of positions constantly. You want to get that position and then manage it, uh, very slightly over time. But and it kind of ties into that video I did on quarterly shifts, right? If you can get a
Oh, yeah, that was great. Yeah,
yeah, if you can get a trade in the direction of the quarterly shift, that, in my opinion, is the most stress-free form of trading. Just because um, if you can identify that movement, it's the type of trade where you can set it and then just ride it, and it's one of those rare types of trades where you can just almost forget about it, come back at the end of the quarter, and
yeah.
find your
It is
profits.
a very hands-off approach. Yeah.
So it's good for like
Uh,
people who have other careers, and maybe they're not a full time trader. So
yeah. I mean, I think with trend trading, another important factor for me would be using a very low leverage, because you don't need that, right?
yeah, no, you don't. You definitely don't.
And again, why would you expose yourself to the risk of, you know intra-week, intraday volatility, putting on, let's say, a 50x leverage position? Doesn't make any sense, So you could be good with 2x, 3x maybe, and ride the trend for 3 months, 4 months, whatever. So,
Yeah, or you don't even really need leverage. You just need a spot position, really. But
yeah, considering the percentage move that Bitcoin can do, yeah.
the idea with the futures position is that you can put on a really big leverage position, and you don't pay any funding for it. In fact, you really get paid in funding for it, because a lot of times there's no, when you do take that position, there's no funding on excuse me, there's no premium on futures, and then when the trade starts to play off in your favor, the premium will start to run in your direction. So not only do you not pay funding, but you actually get paid the premium on that leverage trade.
Yeah, the best case scenario is basically entering the market when the future is trading at a discount relative to spot, and then seeing that discount become premium.